So welcome back. And we now look at the case of Islam, which I give the subtitle, How Not to Carry Out an Investigation. Let's look at the facts. This was a case where Mr. Islam owned a restaurant and two neighbouring flats. There was undoubtedly a mismatch between the tills, the records on the tills, and the accounts that were submitted to HMRC. Various explanations were given to explain this mismatch. The first was that till number one included, and this is the taxpayer putting forward the argument, fictitious transactions to make the business a more attractive prospect to potential purchasers. In other words, he wanted to persuade someone about to purchase the restaurant that it was doing better business, making more sales, was actually happening. What was really happening is that business had gone through the floor. He wanted to get rid of it because there was no doubt of liability, or certainly wasn't generating enough to justify it. He thought he could make more money by selling the business to someone, but in order to encourage the business sell, he needed to increase the apparent profit. The second explanation was that there was a second till, which was positioned by the phone. And when someone phoned in to make an order for takeaway, the order was taken and entered into the till number 2, given to the kitchen, but then these same transactions were duplicated into till number 1, and it was the till number 1's records that were then used for the purposes of preparing the accounts. So if both explanations are correct, then the mismatches can indeed be explained. The revenue, nevertheless, focused on the fact that the till records showed a different outcome from the accounts, and therefore they went into this case with the taxpayer is under-declaring profits. And they had a meeting, as they often do. And as we'd always expect, the notes of the meeting were prepared and sent to the taxpayer, and formed part of the revenue's evidence. This is the note of the meeting we had. Now, technically it's hearsay evidence, it's admissible by the tribunal, but it has some limited weight. But nevertheless, the revenue will say, well, this is what was said at the meeting, and therefore suggest that any version given by a taxpayer contrary to what's in the meeting notes will not necessarily be reliable. And in due course, the revenue at the tribunal described those meeting notes as a true and accurate reflection. However, for reasons that the tribunal explains and we'll look at in a moment, the tribunal did not agree with the assertion that the meeting notes were a true and accurate reflection. It was clear that HMRC's meetings are not wholly consistent with the transcript and recording, because there was actually a recording of the meeting, and that recording was then written up in a transcript. They continued, it is blindingly obvious that the handwritten notes, which one would expect to be written at the time of the meeting, were written up after the event. And as anyone who has conducted these meetings either with or for HMRC will know, that these notes, what normally happens is that ahead of the meeting, the revenue will type out some notes, which end up being very much a skeleton of the meeting notes afterwards. But they're meant to be a brief or an aide-memoire for the meeting itself. But the tribunal noted that these meeting notes very closely followed the brief rather than reflected what was actually said at the meeting. One clear omission was that it didn't even include the responses given by the taxpayer. So effectively, it just had HMRC's assertions and turned into questions, but no response from the taxpayer. And given the purpose of these meetings is not to bully a taxpayer, but actually to ascertain information, well, that's believed to be the official reason for these meetings, one would therefore assume that the response by a taxpayer should have some importance. Furthermore, it didn't even have HMRC's officers' agreement to the taxpayer's response. There was one point in which the taxpayer had said one thing, one of the officers seemed to say agree or absolutely, and that just wasn't even reflected in the notes either. Furthermore, there was evidence that HMRC officers had carried out covert observations of the premises. Now, this is all part of the way they tend to investigate restaurants which they think have been under declaring tax. They visit, look at how many people were there on a particular day, and say, well, there's clear mismatch between what we saw and the accounts. And as the tribunal said, for an unknown period, HMRC conducted covert observations on the premises, but no evidence has been produced. So the tribunal's thinking, well, we know that the revenue were there. Why did they not actually go so far and actually present evidence from their own observations? And the tribunal said, well, the assumption that we must form is that the evidence of these observations, or the details of these observations, would not have helped HMRC's case. In other words, the fact that the revenue didn't include it led the tribunal to believe, and this is actually sort of part of its fact-finding, they said, well, we draw the adverse influence that the number of customers dining, etc., was in fact so low, as per the accounts, that HMRC's assumption that the trading was actually being understated has been proven to be wrong. Or put it another way, HMRC's actually received confirmation that there was low trading, and they should have actually put forward evidence or recognized the error of their ways and not pursued the taxpayer any further. Obviously, if HMRC had a better reason for not including that evidence, then they should have put it forward, but simply saying nothing does lend to the suggestion that HMRC's observations were contradicting the suggestion that there'd been an under-assessment of tax. As far as the flats were concerned, the tribunal noted that HMRC's argument that rental receipts were omitted. However, Officer 1, there were two officers giving evidence, actually accepted in his own witness statement that even though the rental receipts were omitted, there was no tax loss because the expenses incurred matched the income omitted. So in other words, yes, there was an omission in the turnover box, or the income received box, but there was an opposite omission in the expenses box. So it's all very well saying there's an omission, but the important thing at this stage is to work out how much tax needs to be assessed for. And Officer 1 accepted in his witness statement that there was no tax loss. So why the revenue was still pursuing the case, I just do not know. And Officer 2, in cross-examination, also accepted that she estimated that there was no profit or loss, and she just simply didn't have any evidence one way or the other. So what we have here is a situation where the revenues investigation was probably conducted initially on a fair basis, because we have this mismatch between the till receipts and the trading income. And possibly the revenue were also concerned because profits were falling, and that was perhaps a red light flashing suggesting, well, maybe we ought to be looking to see whether or not it's not profits falling, but simply declared profits falling. So you can understand where the revenue went in. But they were given clear explanations that demonstrated that the revenue's assumptions that there was an underassessment of tax were false. And the revenue should therefore have stopped there. But the revenue continued, and they continued with this case. And I just do not understand why. This is a case where the tribunal said this was not a satisfactory case. The revenue came to this case probably on the assumption, we've discussed this before, where when you've got a back duty case, it's for the taxpayer generally to disprove the assessment. But there's a prior stage that the revenue need to do is to show that the underlying accounts are wrong. And the revenue just simply came up with their magic figure of what they thought the figures were. And had that had a slightest bit of justification, the tribunal said, look, we're not particularly happy with the taxpayer's case. They've not given us any information to suggest that those figures are wrong. And therefore the revenue would have won, the taxpayer would have lost the appeal. But because the revenue couldn't even show that there was a basic underassessment of tax, and in fact the adverse influence would suggest there wasn't an underassessment of tax, HMRC hadn't even got through over the first hurdle, which meant that the taxpayer ended up winning. The tribunal was not happy with this. I'm not happy with this. I'm a taxpayer. And what I don't want is public funds being wasted on cases which are going to be lost, or, put it another way, on cases that should have been won, which are still lost. So I do hope that the revenue will learn some lessons about the way they conducted this case and ensure that taxpayers in future do not have to deal with what amounts to state-sponsored bullying, because that was the end result of the incompetent run case, which one can assume that there might have been an underassessment of tax, but we just don't know. And the revenue just simply assumed there must be and didn't do their job properly.